Hello and welcome to today's NinjaTrader ecosystem event, the Remek Momentum Pro Standalones. My name is Thomas and I'm a platform representative here at NinjaTrader. Now, this webinar is presented by NinjaTrader LLC, which is a technology company responsible for developing and supporting the NinjaTrader trading software. Brokerage-related questions should be directed to the NinjaTrader brokerage team using the phone number or email on the screen, and I'll also post that in the chat. And if you are new to NinjaTrader, please make sure you sign up for a free NinjaTrader account, which includes 14 days of complimentary real-time market data. Our platform is always free for advanced charting, strategy back testing, and trade simulation. You can create your free account by clicking the following link on the screen and then clicking Get Started on the Welcome section. And before I turn the mic over to Frank, it is important to understand that futures, foreign currency, and options trading contains substantial risk and is not suitable for every investor. It is possible to lose all or more than one's initial investment. Risk capital is money that can be lost without jeopardizing one's future or financial security or lifestyle. Only risk capital should be used for trading, and only those with sufficient risk capital should consider trading. Thank you again for joining us today, and without further ado, it's my pleasure to welcome to the NinjaTrader webinar, Frank.
Thank you, Thomas. It's a pleasure to be here. And let me start sharing my screen and welcome everyone. I'd like to check if my screen and my voice is coming through. So first, may I ask a yes for the screen? Wonderful. Thank you, David. Sounds great. Okay, thank you. It's my pleasure to be here. Thank you, Thomas and NinjaTrader, for the invitation. It's really the big day for us. We've been on NinjaTrader since, well, for many, many years, starting with 6.5, I think, and 8.1 is the latest version, which we are fully compatible with, but more about that later. Now, maybe some of you have heard about me or the company, and maybe if you haven't, let me say a few words just as an introduction. So I'm in Canada. I've been in Canada for 40 years. Originally, I was born in Hungary, and that also explains the somewhat funny spelling of my name, but it's just Frank or simply Frank in English. And today I'd like to share with you information about our basically flagship product, the most advanced product that we have, which we call Momentum Pro Standalones. And standalones just basically indicates that no third-party product is needed to run it on Ninja. So there's nothing between NinjaTrader and our product, which results in lightning fast execution and behavior. But more about that later. As the title suggests, it's also a pretty advanced, lightning fast, as I said, volatility based. All these terms do actually have a meaning, and we're going to go into that, into those meanings just a little later. So as for me, I spent about a little bit about my background. I founded Remek about 14 years ago. It took us, as you can guess, several years, many years to get to where we are now, to have a product that we are proud of. And personally, I worked about 10 years at a bank on the software side. So I was exposed to a software environment, which I could really take good advantage of when we developed this software. I was also close to traders in the 90s. Myself, I didn't trade at that time, but that was an early exposure to people who did. And later, starting, I guess, 2008, basically every day I'm on the market. So this is really hands-on experience, and it's my pleasure to share with you what I have learned over the years. Okay, now let me see if I can learn how to switch to the next screen. Right, just one little funny note about the name. When I first came to Canada, I asked the lady at the what was called the Welcome House, then, do I change my name like Andy Warhol changed his name and some other people? I said, no, don't change your name. Your name is perfect. And I said, what do you mean? That was a Canadian lady. He said, well, Ferenc Puskás, list Ferenc, don't change your name. You're in good company. So here they are, those famous people who I share a first name with, and perhaps it will help you to remember how to spell the name anyway. So it's a pretty common name in Hungary, it's just Frank. All right, but let's get to the point. And here's the plan for today. By the way, just again, feel free to please type in any questions. I might stop and try to answer them. I'll try to keep an eye on the chat box. If I miss anything, please forgive me, and then we'll get to the questions in the end, definitely. So here's the plan for today. I'd like to say, so everything we do today is basically about the standalones and showing you why, humbly but firmly in confidence, I'd like to say that you should be using the standalones, or at least you should have a closer look. Maybe that's a better way to say it. You should really, this product deserves a closer look. That's all I'm saying. And it will be up to you whether there's a place for this product in your trading business. So, but first, I'd like to lead you to through some of the basic concepts and tell you a little bit about why we built what we built. And that way, I hope you will understand where we're coming from a little better and why this system might make sense to you as well. By the way, I've been using this for 4 years, ever since the first time it was built, every day. So I'm coming from the trenches, literally. Okay, so let's see. First of all, as everybody, we started out just like everybody else with experimenting, with building systems. For many years, I built systems with Bloodhound, a product that I really like and love, and I became an expert in it. And for years and years, we were building systems with or without Bloodhound for customers. But then it always ended up with the systems not really working or breaking down. Of course, they were customer, for customer specifications. So we were not the ones who designed the system, we just built it for other people. But I started to feel that there is a problem with traditional system design approaches. And we're going to say a few words about that. And then I want to share with you how we can find something that works and how we can shape that finding into a system, which means to build a software, which means to quantify it, to measure it, and to program it. We can only program something with software that we can measure. And this is what I called here, shape our findings into a system, which is a software product, which is firm enough to keep our emotions out of the equation, but or flexible enough, firm enough to keep us out of the equation, because we're the ones who often, damage our own trading activities, but also flexible enough so that people who use this system, they have enough flexibility to customize it for their own needs. So this is a system that very different people in very different countries and markets and timeframes and account sizes can trade. More about that later. Now, I really didn't pick these examples, but the market is just giving us these examples. So I'm going to show you some examples, and I think each of them comes from today, actually. So they're quite fresh, just a few hours old. I'm going to show you charts. And I wonder if perhaps some of the attendees here are also subscribers or members of Remek Premium, or actually, I see some familiar names. Hi, guys, good to see you. And maybe they can confirm that the charts I'm going to show you in the examples, it's very easy to talk about charts in hindsight. Everybody can talk about yesterday's chart. Our subscribers hopefully can confirm that these charts, actually, we talked about these charts before and what to do based on these charts before things happened, and things actually happened today. But there's like thousands of other examples as well. Okay, so to move on, and then I'd like to show you Remek Standalones in action. Hopefully we're gonna, the markets are closed, but that wouldn't bother us. We're gonna look at how the software has been built, what's in it, and what we put in it, why, how we chose what to put in it and what not to put in it. Now, last but not least, I'll be happy to answer any questions, and we'll have a special offer, as always, for attendees. So thank you very much again. And there's a lot of comments are coming in. And I may not have time to read through all of them because then I would never get to the next slide. So allow me to proceed and we'll get to the questions a little later. All right, so here's the thing. I'd like to start out with something that hopefully is memorable. So I put these colors on the chart so everybody will remember this a little later. And this is just a little game, but believe me, we're going somewhere with this. So the question is very simple. How many different combinations of these three colors can you create? I'm not trying to test anybody. Your math skills might be better than mine, but if you think about it, if you feel like it, type in the number, whatever the number you think is the correct answer to this question. How many different combinations of these three colors can you create? More than 9, Dan says. Okay. Okay, well, 6. Chris says 6. Okay, that's not bad. Let's see. Severals. One is very diplomatic. Several, definitely. All right, let's see. So here we go. The correct answer is 6. Yes. So Mike, I owe you a beer. Chris, you as well. And here are all the combinations. And this is basically just simple math. Well, maybe not that simple, but you can Google it. It's not very complicated. What we have to do is basically just multiply every number going down to number 1, which is the last. So we get 6. And mathematically, this is called a 3 factorial with that exclamation mark. Very good. Okay, now let's go on. What if we increase the number of colors to 4? How many combinations would that give? Yes, now the answer is on the chart already. So if I add just one more color, the number of combinations increases dramatically. The potential or the possible combinations now is 24. And maybe you're starting to guess where I'm going with this. And where I'm going with this is this. How many different combinations could we create with 124 colors? I remember with 3 colors, it was like 6. With 4 colors, it was 24. Well, 124 colors, that must be a crazy number of potential possible combinations. Would you agree? Now, and the next question, why is this guy talking about 124 colors? Why not something else? What's the 124? Well, this morning, actually, here's the result. I cannot even pronounce this number. Somebody told me today that this is more than the number of atoms in the universe. Well, I don't know, but this is like a 1.5 trillion something number. I don't know how to pronounce it even. But that's a lot of combinations. And mathematically, that's 124 factorials. Now, where is this guy, me, going with this? Well, this morning, I counted the indicators in NinjaTrader 8.1. Just the standard invitations, no third-party products, nothing, just the standard indicators. And the way many people, I'm not saying everybody, but many people start trying to build a system is that we start to combine these indicators into some kind of system, some kind of either with Bloodhound or without Bloodhound or NinjaScript or any other tools. And we try to build a system. Now, the problem is that here's the problem. Why 124? Because that's just the number of indicators. And again, it could not be 124 because, of course, there are third-party indicators worldwide, and each indicator has many settings which you can still play around with if you wanted to. So this game just never ends. And I know from practice, from personal experience, that I was up 24/7 for years trying to build systems, and the potential combinations just never end. And which is more unfortunate is that the system that we built didn't really have an edge. So what's the problem here and what is the solution? Well, now also I just want to emphasize that doesn't mean that these indicators are not useful. Many of these indicators actually are quite useful and they measure something valid. Of course, Maybe not all of them. It depends. We have to look at them each and examine them one by one to see how we can use them and what utility they might be able to give us. But just the issue is, or the message I'm trying to tell you here is that this approach, we could live 1,000 years, we'd never finish this job. This just goes on, and I know this from experience. So depending whether you agree with me or not, I personally thought there must be a better way to do this and to come up with a system that has an edge, which means an advantage, which means we can make money doing it. Okay, digging deeper. So we're still talking about understanding the market. There are 4 things on this chart. I'm not going to spend too much time on these 4 things. 1, the edge. 2nd is this colored little thing here. 3rd is a chair, a 3-legged chair, importantly. And the 4th is a process. I'm not going to talk too much about these because I'm going to share this Google slide, and you can click on these images and it will take you to pages on our website. These have been discussed many, many times over the years. We have videos on this. We have web pages about this. So you'll be free to dig in deeper and read and watch these videos. We also have them on YouTube. So these are linked to further resources. But just in a minute, let me just tell you what each is. So the first one here is the mathematical definition of the edge. And the edge is a statistical advantage, and I'm sure everybody knows by now, but if this is the first time you hear this, then let me just say this, that without an edge, without a verified edge, it makes no sense to even risk a quarter on the markets. So we only earn the right to risk our first dollar on the market after we have verified our edge, which is a mathematical equation, which means simply, this is just plain English, it's nothing difficult. The percentage of wins multiplied by the average win plus the percentage of losses multiplied by the average loss must be bigger than 0. Otherwise, we're going to lose money consistently. And this is a plus sign. Note, please, because the percentage of loss is a negative number. So the second part is actually a negative number. So you will deduct it, and it must be bigger than 0. Otherwise, we're going to lose our money. So that's the edge. Second is probably, to me, was the most dramatic or drastic or hard-hitting realization somewhere like 3 a.m. in the morning one day in my own trading, this little chart here. And let me just say one sentence about it. The green circle, this circle, there are 2 circles. Don't worry about the middle. That's just an overlap of the 2 circles. So the circle on the left is the green circle. Those are the market imbalances. That means those are the only situations which are able to move the market. We need to have an imbalance in the market for price to change, actually, for price to move. Okay, that's one thing. The second, one thing is important about the market imbalances. We cannot see them. We're not the bank. We're not the hedge funds. We don't have the order flow of 500,000 people. So we cannot see them. All we see is the chart. So that's one thing. The second on the right, which is the red circle, will be the patterns on the chart. Patterns that we think might make us possible to make money. These are the patterns. Now, the problem is that, yes, patterns tend to work, but as we all know, not every pattern works. Some patterns just break down. So they just don't go anywhere. Let me just step back. Give me a sec. Okay, right. So not every pattern will work. Some patterns are so-called pseudo patterns. And also the imbalances are not shown. We don't see them directly. Now, what we want to trade is actually where the imbalances are actually shown by patterns on the chart. The problem is that we don't know. To make it simple, let me just say it this way. When we see a pattern on the chart, a beautiful something that we love trading, when we enter the trade, there's no way for us to know if it's a real imbalance in the market or just a random formation like a cloud in the sky that looks like a whale or a watermelon or something. Okay, so there's no way of knowing. And that's one big, actually, ingredient in the psychological grit that we have to develop as traders to be able to live with this fact and to be comfortable being uncomfortable in this situation. All right, so let's move on. So you can read more about this if you click on the link later on. The third one is a chair, three-legged chair. Obviously, we need all three legs, otherwise the chair will not stand. Now in trading, the three legs of successful trading, and there's videos on this on the website, on our website, you can check them out later, is we need an edge, statistical advantage, then we need enough capital, which means the gas in our airplane or car. Without that, we're not going to go too far. And then the third one, remind me what that is because I'm talking too fast. I forgot there's a third one. The edge, capital, and skills. Because without psychological skills, we are liable, even if we have the other two, reliable to screw up our own trades. And I have done that so many times. I am a personal example of all that. That's one reason we need software like the standalones to do this successfully. So the three required ingredients of successful trading. And last but not least, there's a process here. I'm not going to go into that, but the main idea is that the market is random enough. What we do not want to do is to add more randomness. If I approach a random environment with my own random actions, that's going to be just randomness squared or something. We don't want to do that. What we want is completely consistent behavior, my behavior as a trader, because I can't expect the market to do the same for me. All right, so my behavior must be completely consistent. That's why we need a system. We need a set of rules. We need a process like a factory. A car gets rolled out a factory door every 60 seconds, same thing 24/7. We need the same thing in trading as well. So that's the process, the importance of the process. So I'd like to ask you, if you're so inclined, if you want to, click on these later and check out these links to learn more. All right, now we need to say a few things about, we're getting a bit more practical here. So these are charts generated, of course, by NinjaTrader with our software program on top of it. And as you can see, our charts are like Zen simplicity. We have nothing on the chart that we do not use. If we do not use something, or if we do not need something, that will not make it to our charts. Our charts are like a Japanese room, is just simple, beautiful simplicity. And that's all we need. And that keeps our thinking straightforward as well, and our decision-making easier. Okay, so what moves price? There are two main forces. I'm not saying anything new. This has been documented in good books many, many times over. But for completeness sake, let me just run through this. There are two forces, momentum and mean reversion. And if I'm able to annotate the chart, let me try to use something here. Right, so just to show you what I mean. So momentum is, let's say, this move, and mean reversion is the move towards back to the middle. Now, you have two choices as a trader. Either you trade this or you trade that. Trade with the trend, trade against the trend. Both are possible. Both can be successful, but they do require different skills and psychological skills and different software tools as well. So it's not the same job. As for us, we focus on trading with the trend, which means we are momentum traders. That's why our product is called Remek Momentum Pro. Okay, so momentum, I'm sorry, let me just try to make it nicer. This is momentum, comes back to the middle, goes down again. Middle goes to the edge, comes back, we expect it to move again. So we are momentum traders. We're trading the momentum leg. It's important to see the market as price action as a result of these two forces. It makes everything much, much easier. Look at the other examples. These are older charts, but I'm going to have new charts again in just a couple of slides later. All right, so two forces that move price. And then we need to understand how people, the crowd, all the participants in the market, which are just human beings. And remember, please, people talk about software, like an HTF and all the algorithms that run the markets. But remember, they were also written by people. And there are breaks and checks and balances in those software, which basically reflect the psychology of people. So risk, the human response to risk and opportunity is programmed into the software. So in that regard, there's nothing new in the software. It doesn't change the game. The execution is faster, but it doesn't change how the market works. Okay, so right, this is the second thing that we need to be aware of, that the price action on the chart, the way we see it or the way we think of it are basically surface representations of people's responses to risk and opportunity. And I know it sounds complicated, but it's not really complicated. And I think the better we understand this, the better our trading becomes, because you start to understand that this is what we're looking at is nothing but people's responses to risk and opportunity. And the better we understand those, the better we can join the crowd, but also stand apart from the crowd at the right time, which means get on the train as it leaves the station, but hop off the train before we hit the cliff, something like that. All right, let's move on. Right, so now I'm getting to the point where if the original approach of trying to find indicators and trying to make them into a soup and hoping that something will come out that works, and that didn't work. So then what would work? And how can we find a system that works? And why I'm making the claim today that we have managed to build a system that actually works. So we need a system that is, let's forget about indicators. We're going to need them later, but very, very carefully selected number of indicators, and always knowing exactly what they calculate. What's the math behind a certain indicator that does something for us? All right, but first, so we need to understand that these patterns are grounded in human behavior and crowd behavior, not the behavior of an individual, as we mentioned, but the behavior of a crowd. That also means that for this trading system, but probably for many or even all trading systems, we definitely need a liquid market. If there's no liquidity, if there's no crowd on both sides of the market, bid and ask, then the pattern's reliability decreases dramatically, which makes it almost impossible for us to figure out what we can expect to happen next. So we need a crowd, we need liquidity. We know that, nothing wrong, nothing new. So, and then we want to find ways to measure crowd behavior. And this is where math comes into the picture, where we measure crowd behavior. We have to find a way or ways to measure and quantify crowd behavior and classify it. In trading on the charts, it will have very concrete forms. Maybe we can talk about those later, or maybe in another session that would take us too far down the path of the inner workings of software. Okay, now the third step, very important step, is to identify what's needed and also get rid of everything that's not needed. And that's that's a difficult part psychologically for many of us, because we have some favorite stuff, but we need statistical methods to prove that whatever we think is useful is actually useful. And often we have found is that something that maybe we thought were useful or needed actually doesn't even add anything to what we do, or sometimes subtracts or takes away from our edge, which we cannot afford. Remember always that in trading, we are up against the smartest people on the planet with the biggest pockets. So it's like being in the ring against Muhammad Ali. It's serious stuff. We have to be ready. Okay, so after all these 1, 2, 3rd step, we started to think about how we can actually build this into a software. That took us years, many steps. I'm not going to go through that. But we have now the end result, actually, as of like 4 years ago. That's when the first version of this program came out. And we have done it first of all, and then we've tested it. We are continually testing it. We are forward testing it. And we're actually forward testing it with real money every day. And we let it run and being used on various timeframes, various asset classes like currencies, index futures, commodities. What else is there? Treasuries, various asset classes on different timeframes. My focus, as you can see from most of the charts, is the 4-hour chart, but that shouldn't limit you because many of our customers are using the same system on the time frame of their choice. All we ask is just always do your due diligence before you deploy real funds, of course. And we've been using this for 4 years, and I wouldn't use anything else. I don't know if that matters to you or not, but that's a claim that I stand by. I can't imagine trading any other way, and I've tried many ways. Moving on, let's see. Actually, this is from yesterday. Okay, actually, the NQ broke out today even more. So this is just one example, and if I may, stop me if it gets a bit too much. I'm trying to look at the comments as well. But in this chart, I'd like to spend a minute to walk you through how we read the market in real time. And this is where I'm going to ask if anybody here is on Remek Premium, because actually this chart evolved through the days, the last, 2 weeks. And I'm going to talk about like, okay, the guy is talking about a chart that already happened. Well, we have video recordings when we were here, when we were in this pullback, when it broke out, the second pullback. We have this trade behind us, which is a 1R for us. Here, everything's on the chart, and everything was on the chart before the fact. And it's not the only time this happens to us. Of course, we have losers as well. But what I'm trying to do here is to show you the thinking process and show you how with very, very few, but carefully selected mathematical tools, the Keltner is one of them and a couple of more, but you see not too many on the chart. We are able to understand and forecast price action, which is the basis of what we do, what every successful trader, every trader has to do to be successful. Are you considering institutions as the crowds? Yes, of course. All of them. Everybody is part of a crowd who is a market participant, regardless of the time frame or the size of the account. Actually, as part of my work at the university, I've been in contact with institutional investors. I don't want to drop names, but many of my students work at famous companies who are market players. And so I have certain exposure for the past 6 years to institutional side of trading. But as far as we are concerned here, and some of the concepts are actually coming from my experience with them. But the point is that we can just put everybody in. If anybody who places a trade on the market is a market participant and is part of the crowd. Okay, so let's look at this chart for a second. Look at this. So first of all, the default behavior for us, for any trader, is to do nothing. So we are standing by. Standing by is what we do most of the time. We are the predator on the tree, the cheetah, as we call ourselves, and we don't come out of that tree for nothing. We only come out if there is work to do. So that's one thing that we have to learn. We are not here to trade. We are here to stand by. And sometimes, only sometimes, at the right moment, we lash out and we act, and then we go back on the tree. This is one of the most important skills that we have to develop. Now, but this is not a presentation of psychology, so let me move on. This chart, the first time we start, let me just use my red little markup here. The first time we start paying attention is when price hits the Keltner. Lower, upper, doesn't matter. I could have marked up this one too, because certainly we pay attention when price hits the Keltner. That just means that price did something which is not really average, because the average price is in the middle. It moves away from the average. And no secret, our Keltner is 2.5, if I can use some kind of arrow. Okay, I'm not very good at this, sorry, but if you measure this distance here, that's 2.5 ATRs either way, so both ways. So our Keltner channel is 5 ATRs in width altogether. Point is, when price hits the Keltner, we have to have a coffee, put on the coffee, start paying attention. That's when our job begins. And the next step, next step is to naturally to wait for some kind of pullback, and then I think I'll just use my freehand. And then it was reasonable at this point to wait for a pullback and expect a move to the downside. Never happened. What happened instead? Price hit the upper Keltner. We don't really care. We didn't really care at the time because we never got a trigger. You see, we didn't get a trigger. We never went short. There was no damage done. So now the table has turned. Now we hit the upper Keltner. Very good. What are we doing? We are expecting price to return to the middle. Why? Because that's what usually price does. Why does it do so? Because many, many human beings do their own thing, which means trying to beat the others to make some money. And this is how it will show on the chart. The big guy stopped buying, waited for, and if the big guy stopped buying, then price will fall back. Maybe smaller guys are being stopped out, so their stops are being hit. Whatever happens, we don't really care. It doesn't really matter. Price come back to the middle. That's all we want to know. Now, when price comes back to the middle, you can guess, and you can look at 1,000 charts, and you will see the same thing. Price is not going to stay there forever. Not going to stay there forever, of course. It can stay there for a while, yes, but not forever. Sooner or later, something will happen, either this or this. Now, for us, as a default expectation, what we expect that since price hit the upper Keltner, this is what we call the momentum move. This is what we call consolidation. And the third event is what we want to trade, which is the re-emergence of momentum out of where? From consolidation areas. And this, I should give it a different color. How about some yellow? This is what our job is, to trade this, the excursion of price from the consolidation area back to the Keltner. Not to the moon, not up here, nothing. It's just a 1 hour trade, and 1 hour is a concept that is well known, but you can Google it or we can talk about it later. The point is that look at this. There are many, many candles on this chart, and our math, our software program, of course, calculates and recalculates all the equations in the background with every incoming tick. But you only see 2 signals on this chart. These signals could be anywhere on any of these charts, and they happen to be at the right moment. This is where actually you have to act. This is where we have to come off the tree as cheetahs and get the prey and then take it back. and give it and feed our kids or whatever, right? So, and then the same story repeats again. We hit the Keltner, we took our profits. What the expected next step? A excursion back to the middle, which is the mean reversion move, which we are not trading, but we are observing. And then we expect another move in the same direction, which is the trend continuation. Now, I'm not inventing anything here. You see, I'm not inventing. So there's a difference between, think of it this way. There's Isaac Newton who came up, and maybe Kepler came up with the rules or the laws of planetary motion. And they did it, they invented it. But it took 300-400 years for NASA to build the first vehicle that actually went to the moon. So we are not claiming to have invented anything. All we did is we just built a vehicle which uses all the giants that went before us, all the knowledge that has been accumulated. Of course, we have to sort it. We had to sort out what is useful, what is not, which was a big part of our job. But once we have done that, we just had to, just in quotation marks, we only had to build the spaceship, which is the standalones. All right, so the standalones, the product. So this is how it works. And this is what we do every day of every trading day of the year. And maybe the people who are my colleagues, I can almost say, who are with me on Remek Premium, our subscribers, our VIPs, our pros, can attest to it, that this is what we do every day. And it gets kind of boring. Well, of course, it's never risk-free. There are bad days, but we control our losses. Otherwise, good trading is, the best word to describe it is boring. The results will not be boring, but the activity is rather consistently same process. Nothing, it's not a rock and roll concert. It's just the same boring stuff every day. And this is what it looks like on the chart. So this was the NQ yesterday, and today we're up here somewhere. You can look at the chart right now. We can look at it later. So that's the point. Let's move on before I get bogged down here. Just another quick example. This is 6J, Japanese yen. Japanese yen, you can look at the chart if you have Ninja open right now, or we're going to look at it in just a few minutes. I'm going to hop over onto Ninja. But first, here's the chart. And you can see this was May 15, 7:30 p.m. Eastern time. So this was 2-3 days ago. And this is the chart with a video explanation and textual explanation for the plan for the next day. So our methodology, here's the thing. Our methodology our methodology identifies the opportunities. We share, if you want to be on premium, you don't have to be, but if you join us, you're on premium. We share the way the opportunities that we have identified for ourselves. We share with you every night, and then, well, you do with them whatever you want. You can use it for study purposes, you can use it for trading, or you can use it for sim trading, or just to improve as a trader. And these skills and this knowledge, very, very important, is general. I'm looking at a 4-hour chart, but this doesn't have to be on a 4-hour chart. You can adapt it to yourself, to your own trading activity. But since I have to be on some kind of chart, I decided to be on the 4-hour chart just to be consistent, and it works fine for me. You can also do it with the micro contracts or even ETFs or whatever you want. The rest is up to you. I mean, if you ask us, I can share the way I think about it, but that's beyond the scope of what we're talking about today. So here's the 6J in real time, forward trading. Here's the timestamp. The future hasn't happened yet. Next day, we hit our target area. Nothing really new here. Again, I'm not discovering anything. The 1R has been hit. We violated the target area even a little more. Bearish breakout. So see the ingredients on the chart. There's a pink message here. There's the ATR is constantly calculated for you. in dollar terms, you always know your risk because we measure risk in ATRs. And this is recalculated with every incoming tick. So everything is real time. This is just a screenshot, of course, but it happens real time. And here's the timestamp. So everything, the trade is done. We're out, we're flat. And then there's some more. And now today, if you look at the 6J today, probably we're here somewhere. I don't know what happened. This was a couple of hours ago. Look at this around lunchtime today. So we have the 2 R's. And the 2 R's means simply that R, just for reference, R is our risk, which means the distance between our entry and our stop. And the reward is the same distance on the other side. And if we happen to sometimes get twice the reward of our risk, then we call that 2 R's. I think the concept comes from Juan Tharp, who I think, well, a trading legend anyway, and feel free to Google his books, and he's one of the giants of our profession. And I think that's where the concept comes from, but many other authors have wrote about it as well. So one example for the NQ from yesterday, one example from 6J from yesterday and today, overnight trade, and I could go on for a week and not even have a lot of the trades left. So let's move on. Now, this is the time where I need to emphasize that we need to stay humble. I'm not the only reason I put these very high-end products on the chart, not because I want to compare our products with theirs, in no way. But what I'm emphasizing that even the best machines need somebody who has the skills to operate those machines. And this is a little disclaimer too, because I don't want to, I'm an academic, I teach at a university, my reputation is everything. I'm not gonna lie, it's not worth it. So I'm not gonna say anything that's not true, which means I'm not gonna say that, okay, buy this stuff and then you made it. No, it doesn't work that way. You need skills. Remember the 3-legged chairs. The skills come from you. I cannot give it to you. I cannot give you capital either. So out of the 3 legs of the chair, I can only give you the tool, but you have to bring your own money. You have to bring your own skills. That's how it all comes together. What these very high-end products, what I'm trying to convey the message here is that you can buy the best product, you can buy the best piano, but you still have to learn to play the piano. You have to be able to play the piano. Same thing with a car, or, well, if I fly to Europe and you tell me there are 2 planes for the same price, or even not for the same price, one has a pilot, the other one doesn't have a pilot, which one would you take? Well, doesn't matter if it's the 21st century or whatever, but I would still take the plane which has a pilot. There is an autopilot on the plane, yes. And those of you guys who have heard me, this is not the first time I'm saying this. I don't want to bore anybody, but I just want to run through this quickly because I always want to emphasize the importance of skills development. You really have to actually develop your own skills. It's like going to the gym. Watching Arnold Schwarzenegger on YouTube is not going to do anything for my muscles. I have to get my butt down to the gym and do it so that I can develop the muscles. Same thing with trading. You have to do it to develop the muscles of trading. Enough said about that. So now let's see what's the idea and what are the details. What did we do here? So some of it I already touched upon. What's the idea? The idea is very simple. We trade the re-emergence of momentum out of consolidation areas. That's a very technical term. All it means that the market moves this way and we want to enter or engage with the market around this area here, where momentum is likely to re-emerge. Now, remember, when we enter here or here, the future hasn't happened yet. So we are here, you see, we are here. And you have to make a decision. Are we going to go long from here? We don't know the future yet. And 3 things can happen when you enter the trade. Price can break down. It's a loser. That's why we need stops. Price can turn some kind of sideways bullshit, nonsense, which we're not really interested in staying in too long. You may have a rule to exit after, let's say, 10 bars if it goes nowhere, because it ties up capital. We could use capital somewhere else. And then hopefully, at least 1/3 of the time, price will go up and we'll be able to trail it and either 1R or even more to be hit. So this is how it works. When we enter, we don't know which one will happen. And one skill is to be comfortable with the fact. And if you're not, I mean, I wasn't for many, many years. So I know exactly that the normal way things start out for any trader's career is to not to be comfortable with the unknown future. And also, we have to develop, same thing, I'm just saying the same thing with other words, is that the losers are basically, we have to see them as the cost of doing business. Is the cost of doing business. I don't even, what I worried about when I trade? I worry more about my internet connection breaking or the electricity to go out from the building than a loser. That's the real risk. Or not being able to call the broker on the phone if the electricity goes out. Those are the real risk factors, not a losing trade, because the losing trade is pre-calculated. I've done my testing. I already know how many losers I'm going to have next month. Something like that. Okay, so let's move on. There's a lot to share. And then we have the observed crowd behavior. Beautiful. And then we needed to figure out how to make this knowledge or these observations into a software program, which is usable for somebody who is using the software. So it had to be fast, of course, consistent, accurate, and precise. All these things that you expect, bug-free, of course, and built for a rock-solid trading platform, which is for us, Ninja. I cannot emphasize enough how highly we think of NinjaTrader as a software platform. We wouldn't do it on anything else, actually. And I'm happy to also report back to you that we have done I'm just saying this in brackets, but important to say that we are completely ready for 8.1. So feel free, if you're interested in using Remek software, you can migrate to 8.1. We have tested all our products, so we're completely compatible with 8.1. If you choose to stay on 8.0, that's fine as well. We have been on 8.0 for years, but feel free to move on to 8.1 if you're so inclined. All right. So as we said many times, and I'll continue to rant about it, I'm afraid that skills are needed. Okay. And now I'm going to just stop to sip a little coffee here. Excuse me one sec. Yes, Juan, exactly. So yes, so this is called disaster recovery, or just to really evaluate the risk factors, the real risk factors in trading or like anything else. And if you have done the back testing, forward testing, all the stuff, the due diligence that we call, then you will realize what we have realized is that a losing trade is not where the real risk lies if we have done our homework. Okay, so let's move ahead. A couple of advanced features of the software, which I'll be very proud to show you in just a little later. Buffer zone, a unique, I haven't seen even the concept to surface anywhere, and I can't tell you where it comes from. It comes from my head, but after being close to the fire, so to say. Chop filter is pretty well known. Chop filter basically just means that, let's say we're trying to trade the trend, and then something happens and the market flattens out. We don't want to really be active here. This is when the cheetah wants to sit up on the tree and not do anything. That's not our time to get involved. And the chop filter, we have a pretty good one, good concept, solid foundation, almost real time. Actually, the buffer zone is the one which is completely based on price action. That's the one that I would not even, I'm not even going to go into details how it was built. It's pretty proprietary, but it's like practically real time. It switches on and off the system when trouble is on the horizon, keeping a lot of money on our account. Chop filter is a more well-known concept, and we have a pretty good implementation of the concept in our software. Signal counter is, let me just say a few words about that. So here's the trend, and what we want is to have the ability to limit our engagement with the market to, let's say, the first X number of trades. I know the trend could go on for 2 months, but most of the time it doesn't. So I don't want to trade pullback number 56 or something. I want to trade pullback number 2, 3, and 4, and then call it a day. This is what the signal counter does, and the concept is well known. We have a rock solid implementation, no problem. Directional filter means that, well, let's say this could come into play. Let's say I'm considering various time frames, and let's say the higher time frame is going up, but the smaller time frame is like this area here, let's say, and I have several pullbacks here, and I'm kind of inclined to take a couple of shorts here. But I do realize that the higher time frame is against me. Now I can switch this on and prevent me from the temptation of getting involved in this nonsense, which we often are tempted to do because just the chart looks so good, but it doesn't usually lead to too much good. And that's why we have this directional filter, which the software will prevent me and remind me and almost force me to ignore these noisy areas which are not for me. HTF filter, higher time frame filter, does the same thing, basically forces me to only consider trades which are in sync with the higher time frame. So I want to go where the train goes. You know, I don't want to go against the crowd, against the higher time frame, more forceful movement. Cloud is an interesting concept. It's based on linear regression, which is one of the few mathematical concepts that actually are quite useful in trading. And we have managed to build an easy to understand and decipher visual representation of momentum. We are actually able to display the strength of the momentum on the chart. And also it is inside the mathematical calculation, but at the same time, we have visually put it on the chart. So we feel psychologically, we feel a little bit more confident and comfortable when we're in a trade. So that might also put a little bit more money into our pockets because we're not going to hastily exit a trade because we're scared or something like that. Okay, there's some other stuff here, and I'm talking about the software implementation now, some other functionality which just makes our life so much easier. So there are two categories. The first one, the one that I've been talking about so far, have to do with the mapping of the edge, which means the software realization of the edge, the programmatic capture of the edge by software. The second category is basically ease of use, usability enhancement, which do make our life much easier during our daily work. Yes, David is asking, let me answer quickly. Yes, we have a 15-day free trial, of course, of our software. And the trading room has been a little bit suspended for various reasons. But every Monday, there was a time when we had one every Monday, and I'm eager and willing and ready to revive that customs or even expand it to 2 days a week, something like that. It depends a bit what we mean by trading room. Trading room, by that, I don't mean I'm not a circus actor. I'm not gonna perform. I'm not eager to perform trades in front of people or something like that. And I don't think that should be the purpose of a trade room. The trade room should be to educate people on how to figure it out, how to help them to figure it out for themselves based on live action, market action. Also, I trade live every day, and I really prefer a quiet room I either trade or I talk. I can't really do two things at the same time. So having said that, I'm very interested in sharing all the knowledge that we have accumulated over the years with those who are interested. That's all. Okay, let's move on quick. What am I looking at? Oh, I see. Okay, advanced features, right. So this is just basically, I'm not going to stop here too much. This is basically the same thing that I've described already, just a bit more detailed. Again, this Google slide will be shared, so feel free to read this later. I don't want to spend too much time. It's all written here and it's pretty boring anyway, if I just read for you what's written there anyway. Okay, now there's one more thing though that I must point out. And I've said maybe once or twice that something that we're really proud of, but I must say it again, and forgive me for that. The next one, we are really proud of. And I don't think there's anything, I haven't seen anything, not that I'm really looking, but I think we're really unique in that regard. Let me just say it that way. And let me tell you what it is. And it's right here. This program, especially the BT and the BTX, there are some slight differences. As you see, I haven't mentioned this, but if you're new to this, we have 3 boxes, and you might ask, so why do we have 3 boxes, 3 products? What does this mean? That means that these are triplet products, very, very similar products, powered by the same algorithm, but there are some surface differences which made it necessary for us to make these into 3 products. And as a result of how NinjaTrader is built, the architecture of the software platform made it necessary for us to put all our goods into 3 different baskets. And believe me, it works. And we can talk about it more, or there's a lot of stuff about it on the website. But basically, think of it this way. I'm a plumber. I show up for the job, and I have 3 screwdrivers in my bag. Which one am I going to use? Whichever fits the job best. I have to look at the job, and then I'm going to pick the right tool to do the job. Same thing with the trade. And or with these software boxes, the software tools, PRO STR, BT, and BTX. When the trade comes, the opportunity comes, I decide which one I'm going to use. And don't be afraid. In practice, when we trade, it's not difficult. It's just pressing a button, basically. And I'll show you how that works a little later. Now, David, well, in trading, how powerful a computer is needed? In trading, as we know, you need the fastest computer you can afford and the fastest internet you can afford. Imagine you are up against people who really have fast computers, and some of those people could be on the same floor as the CME. Now, deal with that. So every millisecond counts, and you may not get filled, whatever. So everything helps. Having said that, this Ninja is very good on a normal i7 laptop, fantastic, and our software is as fast as it can be. So get the best computer that you can afford. This day and age, the minimum I would get is some kind of i7, something like that, or Apple equivalent. Or remember, this is all Windows, so we are in Windows only. Oh, Dan is saying that our indicators never froze up my computer. That means his computer. I'm very happy to hear that. We found the same thing. Our computers are running 3-4 computers in the office almost 24/7. So this is very, very, actually, one thing I'd like to say, you see the cheetah logo on the boxes. We don't brag about it, but the logo is there for a reason. The logo is a proprietary technology that we have figured out. It's, of course, within NinjaScript, within the platform, within the boundaries of the possibilities, but the boundaries are very, very wide. And we have come up with a method which just makes our software faster than I have seen anything else. So, but I'm not making claims. So all I'm asking, get the free trial 15 days and see it for yourself on your machine with your internet connection and report back to me what you find. And if something's not seem to be working, let's talk, and maybe I can help you to make it faster, or maybe I have some suggestions, because many things, we've gone through the same things already. But this is fast. Okay, now back to the point, guys. Back to the point. This software is not rigid. This software is not cast in cement. This software evolves with every incoming tick. Evolves meaning learns. And I hate to say big words. I'm not a machine learning expert. I don't want to say things which are not true. So that's why I said it's a question mark. You see this? A question mark. Is it self-learning? I don't know. I'm not a machine learning expert. Maybe in 2 years, you ask me the question, I might have a better answer, or maybe I can consult with somebody who is an expert. I don't know at this point. But what I do know is that it self-adjusts, which means every incoming tick will and can modify the behavior of the software, which means the software, as the ticks come in, modifies its own behavior. This is as big as it sounds, believe me. And this is the proudest achievement, if there's one, then this is what I want you to walk home with, that this software is self-adjusting, and it's volatility based, which means if the behavior of the market changes, the behavior of the software changes with it. I could talk about it for like 2-3 hours. So I'd better stop here and just keep it at this, and we can go into more detail in future sessions, or check out the materials on the website. What I want to say here is that it is self-adjusting. Dare I say self-learning? I don't know, but I'm inclined towards being able to say that, but maybe not today. But what it does is that this trading engine, this software, captures a persistent edge. Persistent means, remember what we said about the Dow Jones or the tulip mania or anything. This behavior by the market, this constant fluctuation of momentum and mean reversion seem to be persistent. Now, nobody knows the future. Maybe tomorrow morning we wake up and the whole world is different and markets do stop behaving like this. It's not very likely. This has been going on for thousands of years. And but certainly well documented since the Dutch tulip mania, which was in 1600 something. So these patterns keep continuing. And I think, well, experts think, I just read it, what they think is that it is like this because it's human beings who do it. And crowd behavior, this is one way crowd behavior emerges. Okay, so I think we figured out a pretty good way of capturing this into a software product with the speed that we do require, especially on smaller charts. And let me just mention in brackets that on YouTube, we have a video even on a 250 tick NQ chart. 250 tick is as small as you can imagine. It's very quick. NQ, it's like a jumping idiot. It's a very, very small chart. I'm not recommending you trade it, but just as an example, as a demonstration, we put our software on it, and I'm not going to play it now. And I recorded the screen for hours and hours and hours to whatever happens. And I only did one recording, believe me. And it's on YouTube. So check it out. A very small chart, very quick chart. Who are you up against? Professionals with big money who are perhaps meters away from the CME computers, and see the action and the results on the recorded video. Again, I'm not making claims. I leave it up to you to make your decisions and whatever you want to make with this information. But this is how I see it. Okay, so a sound concept and superb realization as far as software is concerned. And I honestly haven't checked. I'm not even planning to check other products. Obviously, there's many, many good products out there. And but what I can say is that we are ready to be compared to any of them. And I will stop right here. So I think it's time to look at the system, shall we? What time is it? Oh, it's getting a little late. Sorry, I ended up talking too much. My daughters have warned me, Daddy, don't drink too much coffee because you won't stop talking. And that's exactly what happens. So please forgive me. And what I'd like to say, on Saturday, I was planning to have an open house. So a question and a Q&A and a question period on Saturday. So I'm gonna send out a Zoom link just to continue this so we don't have to sit here all evening. But before we finish, let me just show you how the system works. And it's like, okay, well, the market will reopen in 10 minutes. So the charts are not moving right now, but that doesn't really matter. We are looking at a workspace. This is BT. And many of you, perhaps you've seen this a million times. Maybe you own the product. By the way, if you own a previous version, this is a good time to upgrade or update, because I'll have a coupon code for existing members or current owners of the product. All right, so here we go. This is the ES, beautiful breakout, another action that we were on right on top. As people who have been with me know exactly what I'm talking about. Here's what happens. We're looking at 5 charts. I'm not going to go all the details. All this is available on the website in videos which are concise and edited and straight to the point. So I'd like to ask you to look at those. But what I can say here is, like always in Ninja, we right-click on the chart, choose strategies, and we have 3 products: PRO SDR, BT, and BTX. I can say a few words about what's the difference between them, and then I will ask you to check out the details on the website. So we are in the BT workspace. So allow me to put the BT on the chart. The BT, in many ways, our most advanced product. The BT is the one that removes most of my emotions, my own emotions, from my own trades, which, as we know, often is exactly what we want. Because often what I found is that I was the one who caused myself the most damage. Okay, so here is this very, very Zen simplicity kind of interface that you're dealing with. There's just 2 buttons, and that's all we need. And messages on the chart. We are in a bullish breakout, as you can see. And the timestamp is here. Just a couple of indicators, exactly what we need. And those people, those of you who've been with me know exactly how we use them and what I'm looking at when we look at these indicators. So all that information is available to all of you. Just sign up for the free trial and you'll get the information. So here's what happens. For example, I have a headache. I don't want to trade. The system is switched off. Signals might come in, but no trades will be taken because I'm not in the mood or whatever. But when I'm ready to trade, I'm going to switch the system on, and then basically the system is live, of course with sim account, but otherwise live, and it will run the calculations in real time with lightning speed, taking much of the burden and the stress off my back, so I can focus on what a human being should be focusing on, aspects of trading which are personal, which are hard to quantify, and which are which are not part of the software program. But not everything, like that's why we have the pilot on the plane. Not everything is supposed to be automatic. The pilot is there for a reason. I am the pilot of my own plane. If I switch on the system, I know why I did that. If I switch to long mode only and ignore short signals, I know why I did that. So I have complete flexibility, same with shorts, as to what I want to do. I'm able to override certain aspects of the automation or even switch it off totally, which is what I often do actually, because remember, we are not here to trade, we're here to make money, which means we only trade when the time is right. Otherwise, we sit up on the tree and we watch the world go by. But when there's time to act, when it's time to act, then I jump into action, do my work, and then get out. Now, if I want to keep this switched on because it's a strong trend and I know what I'm doing and I want to catch pull back 2, 3, 4, I can keep it switched on. But the moment will come when I either need a coffee or I want to go biking or I need to make a phone call or something, or I'm done with my money or my rules tell me to stop trading for the day, I switch it off. So this is the interface. I could speak one more half an hour about the Market Scanner Pro, which you see here in the corner inside the Market Analyzer. But forgive me, I'm not going to get into that because then we're going to be sitting here till the morning. But this is the Houston of our brain, of our work. This is the brain. This is all numeric, objective, quantified information on the job at hand. And it doesn't have to be in the same way in your case, but in my case, I'm following about 30 instruments. And all this information, I don't just randomly click on markets. This information tells me exactly which markets are worth looking at. Like cotton, for example. People who are with me know already what we did about cotton yesterday. So here's cotton, breakout, outside the Keltner, 1R, job done. And then life goes on and we're ready for the next opportunity. So all the colored information and numeric information is here. This is all documented in detail on the website. So you're not missing anything if I'm not going to say much about it because it's all written down. So let me stop here and show you the last slide, which is basically, I welcome all the questions. There's lots of questions, lots of comments, and forgive me, I didn't read them all. There was just I'm not very good at multitasking. So if I missed many questions I missed, would you mind typing them in again so I can see them now, and then I'll be happy to answer them. But let me check with Thomas. Thomas, we're taking a bit longer maybe than we were planning to. I'd like to check with you if we still have time.
Yeah, we'll want to wrap up in the next 5 minutes here.
Wonderful, wonderful. Okay, so so let me say this. We have a coupon code right here in red, which you can click on or just visit the website. I'm going to share this in an email within the next few minutes after we close the session. And feel free to use this coupon code. I think it's 45% off, almost as good as it ever gets. So this is going to be the best deal of 2023. Not even Black Friday will match it because this is NinjaTrader's webinar. It's got to be the best. So this is the best offer of 23. If you're ready, do it. If not, ask me questions, please. I'm always at your service. Now, this goes for our products, the coupon code, and it also goes for the premium membership. So if you want to join me every day and do what we do in real time on the right edge of the chart with the future not having happened yet, then join me. It's tough, but trading is tough. But that's the way to do it. So check it out. And we have a 5-day free trial for the membership as well. And we have a 15-day trial for the products. So you don't have to spend $1 to check us out. And please just download the free trial and see what it can do for you. Okay, so here's my contact details and all the links. These will be links for further information. And let me just say that tonight, I'm going to send out an email to you and thank you for your participation today. On Saturday, how about meeting at 11 a.m., let's say Eastern time, if it's convenient for you. We'll have an open house. We had it a few times in the past and it was a great success and there's no time limit there and we can go everything and I'll be happy to show you stuff and answer all the questions. So the email about that will go out soon. And the last thing that I need to tell you that the coupon code is good for till Sunday, midnight Eastern time, and no extensions. So thank you so much. It's been a pleasure spending this, almost 2 hours. I don't even know how much with you. It's been great fun for me, and I hope it was useful for you. And I'd like to thank again NinjaTrader and Thomas for inviting me. This is really a great opportunity for us to get some bigger exposure to our work within the NinjaTrader community. Thank you very much. And if there's any last minute questions, please type them in and I'll be happy to answer them. Would you mind copying it? Okay, so yeah, thank yous are coming in, but I don't see any new questions coming in. But don't worry, if I missed anything today, see you on Saturday and we'll go through it all. So thank you again, and back to you, Thomas.
All right. Well, thank you again, Remek, for taking this time to share with us today. If you enjoyed today's session, we hope you will join us in future webinars. Follow us on social medias for alerts on upcoming events and other NinjaTrader ecosystem news. We would like to remind you that the information provided was that of Remek Trading Systems and not of NinjaTrader. All information was for educational purposes and should not be construed as trading advice. Enjoy the rest of your day. We hope to see you in future webinars. Happy trading from all of us here at NinjaTrader.